If you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord.
What's going on, everyone? My name's Obi, and welcome back to the Courtside Financial Podcast, the podcast where we talk about business and technology. Now, in today's episode, we're going to be taking an honest look at Nio. And when you're an investor, that means that we have to take a look at the facts. Sometimes good, sometimes bad, but we're going to look at everything honestly and objectively. Still bullish on Nio, still majorly optimistic on the company, of course. Anyways, this is going to be a super interesting, super insightful video. If you're new to the channel, make sure you hit the like button, make sure you hit the subscribe button, click the notification bell icon. All your engagement does go a long way. It allows me to continue doing research and putting out quality content for you guys, and it helps us reach a broader audience. So anyways, without further ado, let's dive into today's episode. First off, I know we've talked about Nio's Q3 numbers a lot this week. There's the good, there's the bad, and there's the promising, but let's kind of hone in on the bad a little bit today. Okay, so revenue hit 18.67 billion yuan, down 2% year over year. But there's a number that should kind of make every investor's eyes open up a little bit more, I think. They're losing 104,000 yuan per car. That's not a typo. Every single vehicle sold is producing a six-figure loss. Now, I can hear some of you saying, but Obi, you're bullish on Nio. And I am. But here's why we have to talk about this. Nio has the highest unit price amongst its peers at 308,300 yuan per car. XPeng's at about 251,200 yuan per car. Li Auto is at 293,100 yuan per car. Yet Li Auto is making 13.2k profit per car, while XPeng's losses per vehicle are less than half of what Nio's are at 45,300 yuan per car. Let's break down why this is happening, because this is crucial for every Nio investor to understand. The company has invested in 2,679 battery swapping stations across China. Each fourth generation station costs 2 to 3 million yuan. That's over 10 billion yuan in infrastructure investment. Here's the cold hard truth. The massive investment is showing up as depreciation on their books, adding about 30,600 yuan in cost to every single car sold. Compare that to XPeng's 15,000 yuan per car sold and Li Auto's 4,800 yuan per car sold. But here's where it gets interesting and why I'm still bullish despite these numbers. Nio isn't just dealing with infrastructure costs, they're spending big on R&D and sales. In the first 3 quarters, they spent 9.4 billion yuan on research and development compared to XPeng's 4.45 billion and Li Auto's 8.66 billion. Per vehicle, that's 6,300 yuan for Nio versus 45.2k for XPeng and 25k for Li Auto. Now let's talk about something fascinating that's happening in the Chinese EV market, the 300,000 yuan watershed. Above this price point, there's a clear divide. Most successful vehicles are plug-in hybrids, except for 2 brands, Tesla and Nio. This is crucial because Nio has managed to establish itself in the premium pure electric vehicle space, something that very few companies have achieved. Please take that into account when you're looking at the bigger picture holistically. You can't talk about the bigger picture without looking at a company like Nio, who has solidified its position in the market. Speaking of industry shifts, here's something relevant. DiDi's founding CTO, Zhang Bo, has just stepped down. And while this might seem unrelated at first, it's actually a signal of changing dynamics in China's tech and mobility sector. DiDi has been a key player in advancing mobility solutions, and leadership changes at companies like this could ripple into the EV space, especially as Nio explores deeper integrations with services like autonomous ride hailing. Now let's zoom out and look at the bigger picture. Yes, Nio's current financials might look rough, but remember, it's a long-term play. The EV market is not a sprint, it's a marathon. Nio's heavy investments in battery swapping, R&D, and premium branding are all a part of its strategy to secure a leading position when the dust settles. One major catalyst for Nio moving forward is the launch of its sub-brands Onvo and Firefly. These brands are aimed at capturing a broader market segment for this premium company. And so this could be a game changer. Brands like Onvo allow Nio to address the mid-tier EV market while maintaining their premium positioning that's under the Nio brand. If they execute this correctly, it could absolutely begin to close the gap per unit amongst its competitors while also leveraging the already existing infrastructure investment. I think it's a great strategy. It's a great play. We'll have to see how it pans out. So here's why I personally stay bullish on Nio despite what things look like on paper. I believe in Nio's vision. They're not just selling cars. They're selling a lifestyle and they're building an ecosystem. I say that in so many of my videos, and I'll continue to say that until I don't believe in it anymore, which I don't think that day is coming. From Nio houses to their battery swapping tech, they're setting themselves apart in ways that the competitors just aren't. While this approach is expensive in the short term, it could pay off massively in the long run as brand loyalty continues to solidify and Nio continues to grow its reach, not just across China, but across the globe. So what's the takeaway here? If you're invested in Nio or thinking about investing, you need to have a clear understanding of their strategy and the risk involved. It's a business that goes far beyond just manufacturing and selling cars. It's not just about the Q3 numbers either. It's about where Nio is heading 5, 10, 15, 20 years from now. Are you willing to weather the storm for potential long-term gains? The answer for me, you guys already know, is yes. Anyways, thanks for tuning in to today's episode of the Courtside Financial Podcast. I hope you found this valuable, insightful, at the very least entertaining. Make sure you hit the like button. Make sure you hit the subscribe button. I want to know your thoughts in the comment section down below. Are you still bullish on Nio after having this information? Is this information that's to be expected? Leave a comment down below. Share your opinions. Click the notification bell icon as well so you don't miss any episodes of the Courtside Financial Podcast. Happy Sunday, and I will see you guys tomorrow for the next installment.